This is the mortgage housing update as of March 12, 2026, and let's go through the rates. So mortgage rates, according to Freddie Mac, are hovering around 6.00 for your 30-year conventional conforming loans, and for your 15 years, 5.43. But that was last week. But we know a lot happened over the weekend and this week as well, and the rates are actually up. They're up to 6.24 for your 30-year conventional conforming loans, and for your FHA, 5.85. What does that mean if your loan amount is $500,000? That means your principal and interest is going to be $3,075 for your 30-year conventional conforming loans. Okay? Why these rates are going up? Because your 10-year Treasury is also going up. Remember, we said that we want this below 4%, but is at 4.25, a lot higher than what we expect, right? And that is happening because of your Iran war that we're seeing in real time. So tomorrow's data is pretty important. This is going to be your PCE report that comes out, which Fed looks at carefully, because the Fed meeting is in the next 5 days, and they're looking at two things, right? One is your inflation, which came out from your last data at 2.4%, very similar to in January, but your unemployment. Unemployment went up to 4.4 from the last reading. So let's see if they will do any rate cuts, which we highly doubt, right? So now let's say a family of two want to purchase a house, a single family, and then we'll change this to two family to give you an example. How could they buy a house for $678,000 in this scenario, right? So let's say one of their incomes, husband or wife, is $40,000, and the other person is making $80,000 a year, right? And they have no monthly debt, and they have about $75,000 for their down payment, right? And the rate right now, we put 6.5. We can change that even to 6.25. And property taxes around $7,000, and home insurance around $1,500 per year. So with that, they can purchase a house around $693,000, right? But now let's say they want to buy a two-family. So when you're buying a two-family, we look at the second floor rental income. Let's say if it's bringing in $2,500, we can use 75% of that. Let's just call it $2,000 rent that you're going to collect. Now, that two-family house that you're looking for, you can purchase around $837,000, right? We can run your scenarios if you contact us. And the last thing is your conventional loan, guys. There's so many people who are first-time home buyers says, hey, I want an FHA, 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 right? That's all they want to hear. But they don't know the negative things about FHA. One is your upfront cost, 1.75%, and your mortgage insurance not going away if you put down less than 10% for FHA. But conventional is a lot better option, guys, right? One is that you can put down below 20%. You can put down as low as 5% for conventional, or 15% for 2 units, right? The credit scores is a little bit higher, requirement 620, but you can put down as low as 5%. So if you're thinking about purchasing a house in Long Island, Queens, anywhere in New York, we have over 60 agents that's ready to help. If you have any questions, please get in touch.